Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're talking about the estimated gross receipts fee for LLCs, which is due on June 15th. We'll be covering state tax issues at our upcoming Critical California Tax Issues webinar, which will be presented live on August 31st, and will cover conformity issues, audits, moving out of the state, California tax basis capital account reporting, and more. You can see a full list of topics and get registered at caltax.com under the Webinars tab. The 2022 LLC estimated gross receipts fee is due on June 15th for calendar year LLCs, which means taxpayers need to estimate their total 2022 annual income based on the first 6 months of the year. Any balance due as a result of underestimating total income has to be paid by the original due date of the LLC's return. The estimated fee is required to be at least 100% of the current taxable year fee or the prior year's fee. If the taxpayer's payment is late or less than the amount owed, the FTB will assess an underpayment penalty. The underpayment penalty is 10% of the difference between the estimated fee paid and the estimated fee owed, and there's no reasonable cause exception for this penalty. However, there is a prior year exception that applies, where if the timely paid estimated fee is equal to or greater than the prior year's fee, then there's no penalty. This prior year exception applies to a new LLC, so no estimate is due for the first year. Unlike the corporation's estimated tax prior year exception, there's no requirement that the prior tax year be a full 12 months. The annual fee is based on total California source income, which is defined as gross income plus cost of goods sold. Taxpayers who sell products should add gross profit to cost of goods sold, and to that they also need to add other revenues like interest, dividends, and rents. Because California excludes PPP loan forgiveness amounts from gross income, these amounts are also excluded from the total income used to compute the LLC fee. The LLC is also required to include gross income from corporations and other pass-through entities, with the exception of other LLCs. This means the LLC will include its distributive share of gross ordinary income from pass-through entities, other than LLCs, in addition to the LLC's distributive share of cost of goods sold. Because that figure is not included on the K-1s, the LLC will have to contact the pass-through entity and ask for it. The LLC is also required to include its distributive share of interest, dividends, gross rents, and other distributive items of income. Also included are capital gains but not losses, and IRC Section 1231 gains but not losses. The gains and losses are never netted. For example, if an LLC sells two stocks, one at a $20 gain and one at a $2 loss, it would include $20, not $18, of capital gain in the calculation of total income. Income from the passive holding of intangible property, income from occasional or isolated sales, and expense reimbursements are included in total income also. Under the FTB's interpretation, the fair market value of expenses directly paid by a client must be included in gross income. We have complete information on LLCs and how they're taxed in Spidell's analysis and explanation of California taxes. The 2023 edition is available for pre-order at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's California Minute.